4/10 on March headline durable goods. Let's take out transportation. It's down 6/10. You remember last month, strong, 3.4 and 3.9 respectively. Those were downgraded rather substantially. The 3.4 in headlines now 2.1. Stripping out transportation, originally 3.9, is now 2%. So the weakness is about half what we were expecting, but they took away a good chunk of last month. Let's let the market decide what this is about. We're seeing the pre-opening equities, the Dow futures, not an indication where it's actually trading in the futures markets, has moved up from 30, let's say, to 50. And on the interest rate side, no real change. Interest rates are up a bit from their closes yesterday, but to be fair, they climbed close to 3%, higher yield than we have now in the 10-year, but we saw a rally towards the end of the session. We still have new home sales. We're still going to get information on the guidelines to the assessments of the banks referred to as the stress test, and all of that, of course, has a potential to move the markets. Back to you guys.
Yep, you're right, Rick. Let's get more reaction from some other voices. Jim Urio, Director of TJM Institutional Services, and Steve's weighed in on some other. Steve, anything here that's not immediately apparent in the headline numbers?
Joe, let me just take a look at the table here very quickly. It's come in. New orders ex-defense minus 0.6. I don't like the revisions. Non-defense capital goods, that's a proxy for business investment, actually up 1.9. So that's pretty good. I need to look at that ex-aircraft. I don't have that number right in front of me. But not maybe as bad as it seems. You know, they were looking for a minus 1.5 in the consensus, so minus 0.8. The trouble is they're going to have to do some downgrading to the first quarter GDP numbers because of the previous downgrade for February.
Jim Urio, 8,000. It seems like, you know, we're either a little above or a little below. I wish you could tell me, you know, what was next. Just
sure, I can tell you.
Give me a guess, 9 or 7. I don't, you know.
I think 9 before 7. I don't think we go again. This week has been so confusing to me. We've had 2 strong closes, 2 weak closes. We haven't got a lot of clarity. But if you take a big step back, you say to yourself, well, this is one of the biggest weeks of earnings season, and it wasn't a disaster. To me, you have to put that in the positive ledger. So I like this market. But today's a big day. I think when I have such little clarity from the fundamentals, because, you know, obviously the fundamentals are bad, but the question becomes, is the stock market already priced that in? Yes, it's happy stress test day. Is that going to bring us any news that's going to clobber us? And my guess is we probably anticipated it was going to be worse than it actually is. I can't imagine the government's going to deliver these huge knockout punches at such a precarious time. So that leaves us today. If we rally the market a little bit, we get the futures up above 862, I think we'll see a little bit of a follow-through. But today's definitely a day where I'm waiting to see what the price action is today to give me some clarity from the rest of the week.
Steve, everyone says it. If it's good, it's whitewashed. If it's bad, it's already in. You know, it's what we already expected.
Well, remember that comment we just had from the official, Joe, where he said most people think they're above average. And I think if you look at think about the reverse side of that, they're going to get some information about how good they're doing relative to how well they think they're doing. That will be news to them. I just want to chime in with one piece of data here I didn't have.
Wait a second. If most people think they're above average,
right,
does that mean that potentially you could be talking about the overall situation being better than these guys expect, or that everybody stinks?
That people who think they're in good shape relative to where they think they are going to get some news from the government that they may not be in as good a shape as they think they are.
All right, so stinky outlook.
Yeah, I just want to give you this proxy for business spending or business investment, up 1.5%. We just took out aircraft from the last one.
You like this metric?
I love this metric. It feeds into GDP.
Yeah.
It's a leading indicator. At least it's certainly coincident and somewhat leading. And that's 2 months in a row. And what we've seen over the course of this downturn is, in general, businesses less reluctant to cut capital spending than they are to cut employees.
Mr. Liesman.
Yes, Rick.
We don't know the guidelines, so it's pretty hard to get too excited about this. But let me ask you a hypothetical question, considering you talk to a lot of officials, and I quite refrained from doing that. Do you think that their stress tests would allow for an unemployment rate, for example, as high as 12 or 13%?
You know, I don't know that, Rick. What we do know.
Do you think it should? Do you think it should?
I don't have I don't know, Rick, how to assess banks in that regard.
Here, Mr. Steve, come on.
You know, what I know is that we were told earlier this morning that this was they were tested for an economic outcome that is considerably worse than what we anticipated.
So they tested it for what happened maybe a year and a half ago.
I don't think so, Rick. Rick, I don't think so. I think that we will see these things, and if they did that, it would look stupid. And
That was really the stress that it didn't survive.
Rick, here's the thing. You want to have banks have enough capital for a certain outcome.
Have our capital.
Rick, here's the thing. You are a local official on the banks of the Mississippi River.
Yeah.
You are now required, Rick, to raise the levee and raise money for the levee for a certain flood.
Okay.
What flood do you pick? Do you pick the 100-year flood, the 200-year flood, the 500-year flood, or the 1,000-year flood, Rick?
Rules about the flood, and when they don't make the rules aggressive enough, they should flood away into oblivion.
No, I agree with that, Rick, but the idea...
That's great, Rick. That is fantastic.
The idea, Rick, is that if banks will not trade with each other, then we have the situation we have now.
Who cares if they
we
trade
have
with each other?
Rick, do you understand how the banking system works, Rick?
Historically,
Rick, get out of the pits, Rick. Get out of the pits. There's information outside the pits.
I'm not in the pits, Steve.
Okay?
I think you're in the pits, and I'm not talking about the trading pits.
Rick, you're in this environment here where you have no idea what's going on. You don't even understand how the banking system works, Rick.
You found the environment in the book.
Rick,
between
banks
page 90 and 99, where, we did things in the 1930s, and,
Rick,
we have to try to follow those rules.
If banks can't borrow from each other, you do not have a banking system. A bank does not
I don't think we have a banking system now. We have a government
That's true, Rick.
system that's trying to figure out where they want to go with taxpayer dollars.
Rick, I can argue with the reality, or I can argue with your illusion about what the reality should be. But right now, I'm arguing with your illusion. But in your illusion,
Steve,
Rick,
I have some work to do. I have to check the markets.
Rick,
you can go to the library.
In your illusion, banks fund their lending from current deposits. They do not, Rick. They go out and they borrow money from each other.
I didn't say any of that,
If
Steve.
they don't lend to each other, you said, who cares if they don't lend to each other? They don't lend to each other, Rick. You do not have lending. You do not have a banking system. But in your illusion, you can live in any way you want to live, Rick. Go ahead.
Hey, Steve,
be
it
my
looks
guest.
like all the demand for loanable funds is just going through the roof out there, doesn't it?
Not exactly.
I don't know, but I'm coming more often because this is entertaining.
I know, and it's like an old friend, like putting an old baseball
Totally
glove on.
spontaneous.
And I like it.
Nothing
All right.
planned on it.
Hey, it's Yurio. You still there?
Yeah, I can help, I think.
You can?
I think what Rick is saying is it's comical to think that the government is going to give us this worst-case scenario, to think of how badly they've played the whole worst-case scenario thing in the past. But in Steve's defense, they have to say something. They can't say,
and they're going to tell us the metrics.
So it's another one of these say-somethings. All I know is follow the action.
But, Rick, they're going to tell us.
Exactly, but it's necessary.
They're going to tell us the metrics, though, right? Like, around 2 o'clock, we should have a much better idea.
Information, whether or not
We will know, Rick. We will know. Rick, here's what I was told, and I don't know if it's true or not, but the concept here is to inform the markets, Rick, not displace the market's assumption. The markets come to a series. Huh?
Yeah, that's really the motto they've been following. Yeah.
Well, then the markets will have a lot to say on whether the test is onerous enough. I mean, that's the
exactly. Thank you, Ivanka. That's all. Rick wants less information. He wants less information, and he wants some form of a banking system that was pre-1930, so that if depositors feel a bank is going under, they should line up to get their funds out. That's what we should have.
This is very interesting.
With the topic.
This is an interesting microcosm of
Let him go.
what we're likely to hear from the administration and what we're likely to hear from the market back.
I like how Urio's in the middle, too.
I know, that's good.
Right in the middle.
There is no middle. Take a stand.
Thank you, guys.
Do we really have to go?
You like that?
I do. I love that. If we do it with 2 boxes, not 8, then we get a lot more out of it.